Last week S&P 500 traded bearish, and on the weekly chart it formed a good bearish candle. However, on the first day, on 2nd of January 2026, the S&P 500 has shown some gains, a little gains of 0.19% only. Now this 0.19% is enough to trigger the bullish sentiments in the market because it was the first day of the trading of 2026. However, technically the S&P 500 is weak and is indicating some fall in the coming days, which is why we can see some delay in the 7000, or the 7000 might not happen at all under these conditions. And the reason is the failure to sustain in the 6900 range, because if you notice the S&P 500 on Monday closed at 6905. The only special thing about this is that the closing was above the 6900 psychological mark, and it managed to do so because of the dull movement. That is why it was mentioned that the bullish side will be limited and restricted to the 691x only, whereas the bearish side will remain open to the 687x, and the 6900 will act as the tiebreaker. So in that manner the S&P 500 managed to save itself on Monday. However, on Tuesday exactly the same movement was there. The dull movement was there. However, in the last hour S&P 500 failed to sustain and closed below the 6900 psychological mark, and this was something that was supposed to trigger the profit booking conditions in the market. And Tuesday also the same condition was there, that S&P 500 will trade in between the 691x and the 687x, and the 6900 will act as the tiebreaker. Tuesday there were chances that the S&P 500 can recover and can close above the 6900, but it failed and closed below the 6900 and triggered the profit booking condition. And then on last working day, 31st of December 2025, S&P 500 was hesitant to lose the 6900 until the second half. 6901, this was the high, and this was very much clear. S&P 500 is trading under pressure. This means that 685x will be there, and all of that was mentioned in the pre-market analysis, then the first update, and in this the midday update. And yesterday, because this was the 2nd of January, so there were by default there were the bullish sentiments. That is why we have seen a good gap up open. However, again it failed to test and to hit or to recover the 6900, and the high was 6894.87. so it failed. This means for the rest of the day it will remain in this condition. It will erase all of these gains, will trade bearish, and in the bearish side the 682x, there is a zone in the 682x. This zone will hold the fall no matter what. So this was the first update. In the first update I mentioned that zone, the 682x zone is there, and because of the presence of technicals also, it will be able to hold the fall. But now the S&P 500 has created a condition that is going to put more pressure on the S&P 500, because the S&P 500, the technicals of the S&P 500 on the weekly and the daily chart are now bearish. So how exactly it is going to work? Okay, whether there will be more bullish movement, continuous bullish movement, or it will come down first, then there will be a recovery, or how exactly it is going to work, that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of January 5th. Means from January 5th, which is Monday, to January 9th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. The first part is the technical part. In the technical part, I will discuss the technicals on the weekly and the daily chart, the technical indicators, the candles, patterns, everything. And I will tell you and I will show you that there is a pressure, and this pressure is very heavy. Okay. Second part is the probable movement. Probable movement means how we are expecting the market to move in the next week, the S&P 500, Dow Jones, Nasdaq. Okay, what will be the bullish condition, what will be the bearish condition, what will be the tiebreaker, what will the bullish side resistance level, bearish side support, etc. All of that in the probable movement. So now guys, I'm going to begin with the technical part first. So guys, this is the technical part. In the technical part, first I will cover the weekly chart. So I will cover both of the charts, weekly and the daily charts, in the technical part. Okay, first this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now if you notice, this is the last weekly candle of the S&P 500. The closing of the candle is above the low of the previous candle. Okay, although it is bearish, it is good bearish and is indicating the bearish sentiment, but because the closing is still above the low of the previous candle, okay, that is why it is not indicating a gap down open. No, it is indicating an initial or intraday bearish movement on Monday. That's it. Okay, and also for the rest of the week it is indicating some pressure but not heavy pressure on the market. This is the definition of this candle, right? Now let's analyze the last weekly candle of the Dow Jones. Well, the last weekly candle of the Dow Jones, it is the normal bearish candle, simple bearish candle. Okay, there was very heavy recovery, intra-week recovery in the Dow Jones. So only initial or intraday bearish sentiments on Monday. Okay, but no gap down open. Gap down open cannot be confirmed through this is the weekly candle, just an initial or intraday bearish movement on Monday. So now it is clear that both of the candles of the S&P 500 and the Dow Jones are indicating the same thing. And however, the weekly candle of the Nasdaq is indicating a gap down open. Okay, but we will still count it as the initial or intraday bearish movement on Monday, because so all of the indices are now indicating bearish movement. Okay, initial or intraday bearish movement. Now in terms of the technicals, the S&P 500, if you notice, S&P 500 is still holding bullish through the moving averages, through the Bollinger Bands, through the Ichimoku cloud on the weekly chart. The major change, as I mentioned in the last week, okay, so before that, S&P 500 is bearish through the MACD and is bearish through the stochastic RSI, neither overbought nor saturated, nothing. So in this manner, the S&P 500 is 60% bullish on the weekly chart. Yesterday in the pre-market analysis also I mentioned that it is now 60% bullish only. Okay, however, this does not change the long-term trend. The long-term trend is still bullish. Dow Jones also the same condition, almost same condition, it is bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the weekly chart, and it is bullish through the MACD but is bearish through the stochastic RSI on the weekly chart. So Dow Jones is more bullish as compared to the S&P 500, and the problem is in the S&P 500, not in the Dow Jones. Okay, so Dow Jones is 80% bullish. Dow Jones is 80% bullish on the weekly chart. Okay, whereas S&P 500 is only 60% bullish. Now the problem is that the MACD, let me show you that the MACD of the S&P 500 is bearish. Okay, it is bearish since the week of 17th of November. It is trading bearish, and now the stochastic RSI, okay, it has, so after 24th of November, the week of 24th of November, stochastic RSI turned bullish, but now it is bearish. Okay, now if you have subscribed to my YouTube channel for last many months or years, then repeatedly again and again I mentioned, whenever both of these, the MACD and the stochastic RSI, both are bearish, this means this is the direction, this is the pressure, this is the momentum. Whenever both of these are bullish, then that is the direction, okay, support and the momentum. But now is the bearish pressure on the market. This means that the tech indices, even if means there may come a condition wherein we can see limited fall in the Dow Jones but very good fall in the S&P 500. Very good fall means the 6,700 range in the S&P 500. Okay, that kind of fall here, right? So that is the problem, and now there will be very good chances of sudden fall, sudden and sharp, sudden fall, sharp, surprise fall, you can say. Okay, because both of these technicals are bearish. Okay, and if in the coming week, if there comes good fall in the Dow Jones, then the MACD of the Dow Jones will also turn bearish, and once the MACD of the Dow Jones turns bearish, then it will support the bearishness in the S&P 500, and then in this manner the entire US stock market will come under bearish pressure. We will see some good fall in the market. However, this fall will not change the long-term trend. The long-term trend will still remain bullish. Only the short-term trend will change. Okay, short-term trend will change to the bearish. Okay, but the long-term trend will still remain bullish. Means something like this. It was moving up, then came down, then moved up, then came down, and then again moved up. This kind of. This is the long-term trend. Okay. Now this will be more clear on the daily chart. So guys, this is the daily chart. But before I discuss the daily chart, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get the daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, on the daily chart, first comes the candle. Okay. So candle, there was some gain, okay, and it closed in a bullish manner, okay. However, the pattern here, and 1, 2, 3, 3 consecutive closings below the 6,900, and the pattern is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. This is what the pattern and the closings below, okay, these are indicating, right? This is the S&P 500 chart, and then this is the Dow Jones chart. In case of the Dow Jones, okay, this candle is very heavy bullish candle. Okay, very heavy intraday bullish recovery, then very good, very heavy bullish closing. Okay, this candle is not indicating any gap up or gap down, but this candle is indicating an initial or intraday bullish movement on Monday. This is very surprising, because on the weekly chart, the indices are indicating, all of the indices are indicating an initial or intraday bearish movement. On the daily chart, Nasdaq and S&P 500 are indicating a gap down, okay, and also an initial or intraday bearish movement. But the Dow Jones is indicating on the daily chart initial or intraday bullish movement. Okay, so the summary of all of this, the bullish, the weekly, the weekly chart and the daily chart, okay, through the candles and so, is that on Monday there will be an initial or intraday bearish movement. There may or may not be seen, okay, there's the gap down open, okay, but there will be an initial or intraday bearish movement. Whatever bullish support market is going to get, it will get this bullish support through the Dow Jones, with the help of the Dow Jones. Okay, only the Dow Jones can help, okay, in this, the bullish side. Otherwise nothing is there, right? Now, in terms of the technicals, the S&P 500 is neutral through the moving averages, is bullish through the Ichimoku cloud, is bullish through the Bollinger Bands on the daily chart. The S&P 500 is bearish through the MACD on the daily chart, is bearish through the stochastic RSI on the daily chart, and is neither overbought nor saturated on the daily chart. So all of this indicates that the S&P 500, okay, on the daily chart also, the S&P 500 is neutral. It is still in the bull side, okay, it is, or you can say like neutral and bullish, but not bearish. Okay, so 55% you can say it is bullish. That's it. Okay, not more than that. That is why I'm saying neutral and bullish, but not bearish. Okay, now Dow Jones on the daily chart is bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud, and the Dow Jones is well, it is still bearish through the MACD and bearish through the stochastic RSI. So Dow Jones and is neither overbought nor saturated. Okay, so Dow Jones is 60% bullish on the daily chart and is more bullish as compared to the S&P 500. Okay, however, the problem in the Dow Jones is that if the Dow Jones gives 1 or 2 more green candles, then it will saturate, means overbought condition will be seen, overbought condition in the bull side. Okay, this means then that in that case, okay, we will be expecting some pressure or some fall in the market. So this means that as of now, the bullish side is allowed. Bullish side, okay, it can happen, not a problem, but the bullish side will remain limited in the entire market. Okay, and only the Dow Jones is the only index that will help the market to remain and to trade bullish. Otherwise there is nothing. And once, or if the Dow Jones also changes okay, to the bearish side, then there is nothing that is going to help the market. Okay, in that manner we will see this the fall, this fall, that fall, okay, every other day. However, as of now, long-term trend is bullish, short-term trend is also almost bullish. Okay, but if there comes more fall, then in 1 to 2 weeks we will see that the short-term trend is changing to absolute bearish. But guys, whatever is going to happen or whatever will happen, I will keep you posted, I will keep you updated through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. And guys, before I discuss the next section, which is the probable movement of the S&P 500 in the coming week, let me tell you that how you can join my Patreon community. So along with these the daily precise updates, you will also be getting the opportunities in the premium stocks and the ETFs of the stock market. Okay, so I gave 50 to 80 premium opportunities every month, and that's not all, because I gave the mid-week update. This is the mid-week update video technical analysis given every Wednesday, and in this the mid-week update, the video technical analysis, I discuss all of these, the numbers, levels and everything. Okay, so guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile, and here you will see this button which says membership options. And when you click on this button that says membership options, then you will see that there are these 3 tiers or 3 levels. Okay, level 1, level 2 and level 3. Level 3 is the premium level. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday of the S&P 500, Dow Jones, and in a manner to the entire market. And also they are getting these the premium opportunities 50 to 80, okay, in the premium stocks and the ETFs, and also the midweek update video technical analysis. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the second part of the agenda, and here I will give you the probable movement. Probable movement means what is expected to happen in the market, in the S&P 500, Dow Jones in the next week. What will the bullish condition, bearish condition, the bullish levels, the bearish levels, okay, all of these. We are expecting a gap down open, on Monday. This gap down open is primarily because of the pattern that is seen in the S&P 500 and then 3 closings below the 6,900 level. Okay, this gap down open. Now everything will remain good and well as long as S&P 500 is not losing the 6,800 psychological mark, because once the 6,800 psychological mark is lost, especially on the hourly closing basis, then what will happen? In that case, S&P 500 will have to enter deep into the 6,700 range. Okay, in the say when it enters into the 6,700 range, okay, then from that moment onwards it will also open the 6,600. See, earlier what we knew is that there is a pending technical obligation to the 684x 5x. Okay, if you subscribe to my YouTube channel, then in the previous S&P 500 weekly technical analysis I mentioned this thing, that there is a pending obligation to the 684x 5x and it will be fulfilled. So this obligation fulfilled on 31st of December, okay, and then again on 2nd of January, right? But the problem is that S&P 500 failed to recover, okay, and it remained and it closed within the 6,800 range. Now the problem with this, the closing, is that it is delaying. There is a delay in the 7,000 psychological mark. Okay, see, for last many weeks, okay, I have repeatedly mentioned that even if the S&P 500 try to move up and it reaches very near to the 7,000 psychological mark, then also we will see fall, means we will see multiple falls before it actually hits the 7,000. Okay, this fall is one such fall that it is coming down. It will further come down, hold, sustain, will move up further, then again it will fall. So 2-3 times this will happen before actually it hits the 7,000 and enters into the 7,000 psychological range. This is because S&P 500 has gained heavily. Okay, the speed was too fast. Okay, based on the historical movement of the S&P 500, it was whatever S&P 500 has gained in 2024, 2025, okay, back in 2023, it was too fast. Okay, too fast, and this kind of speed was never seen in the indices. Okay, historically, in last more than 150 years, this kind of speed never ever seen. This is the first time in the history this is happening. That is why the market is extremely overvalued. Okay, overbought. People are saying AI bubble. Yes, AI bubble is there, and in the 2026, okay, in this year, we are expecting this bubble to burst, but no one knows the exact date or the exact week when this is going to burst. There will be some levels, some indicators that will tell us that now the bubble has burst and we will see more and more fall. Okay, anyways, but for the coming week, okay, what we know is that this is normal, this fall is normal. Okay, there was a pending obligation. S&P 500 has fulfilled its pending obligation. Okay, now on Monday we are expecting a gap down, or irrespective of any open and initial or intraday bearish movement. As of now, the level in the 682x will be able to hold the fall, but because of the pattern, the pressure is there. Okay, now if there comes a gap up open, because a gap up open, only a gap up open, okay, it can help the S&P 500 in a manner that after the gap up open, even if it will try to move up, then also it will come down. So irrespective of anything, there will be the fall on Monday. Now when it comes down, then it will be in a condition to hold and sustain at the 682x level. Okay, the real problem will happen when it loses the 682x level, and there comes hourly closings, back to back hourly closings, at least a minimum of 2 hourly closings back to back below the 682x level. And when that happens, then we will see more fall, and then there will be very heavy chances that the S&P 500 can lose the 6800 and can enter into the 6700 range. And when it enters into the 6700 range, then the levels in the 6700 range will be there to hold the fall. The most important one is immediately below the 6800 in the 679x. Okay, and then thereafter the next level is the 674x. Okay, so we can expect and anticipate a fall up to 674x if it fails to sustain and to recover the 6800 from the 679x. Then we can expect more fall, and when it reaches to the 674x, then we can expect the 6600 to be in the picture in the coming days. Okay, because by the time it reaches to the 674x, it trades around the 674x, it will then change the technicals on the daily chart. Okay, though it will take more than a week to turn it into the absolute bearish trend, but the lower level technicals will change up to absolute bearish. Okay, and then we will see more fall. This means that the 682x is very important, very important in the bearish side, not just for the bearish side but also for the bull side, because as long as the S&P 500 is holding, sustaining, okay, and giving hourly closings above the 682x, then S&P 500 will remain in a condition to try and recover the 685x. Okay, 685x is then the bullish condition, because once it recovers the 685x, moves above the 685x, okay, then it opens the 6900. Okay, recovering the 685x opens the 6900, right? But here I'm talking about the 682x. So in this manner, the 682x will be very important for the S&P 500, will define the bearish and the bullish movement. Okay, so bearish side is now very much clear. Okay, the 679x and then the 674x is there. Okay, when it reaches to the 674x, then we will be expecting the 6600 in next few days. Okay, however, so yes, the bullish condition. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also guys, so far if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. So now the bullish side, the primary condition is again the same, and that primary condition is that no matter what, it must not lose the 6800 psychological mark. Even if there comes a breach of the 6800, then also it should recover and should give the closings. All of the hourly closings and the daily closings must be above the 6800. Okay, and then to be safe, it must recover and must hold and must sustain and must give the hourly and the daily closings above the 682x. Okay, because once it is seen trading above the 682x, when it is holding, sustaining above the 682x, then this is a bullish condition. Bullish condition in a manner that a sustained movement above 682x opens the 7000. Okay, a sustained movement below the 682x, okay, it opens the 6400, 6300. Okay, that is why the 682x is very important. Now once it is confirmed and clear that the S&P 500 is holding, sustaining and giving closings above the 682x, then the next hurdle will be the 685x. 685x is the level. So just like yesterday, okay, 685x was responsible for more fall to the 682x, because as long as the S&P 500 was holding at the 685x, okay, on 31st of December, Wednesday, then on 2nd of January, Friday, as long as S&P 500 was holding above the 685x, there was no problem. But once it was clear that it has lost the 685x, then it was confirmed that it is coming down to the 682x, okay, and then we'll find support at the 682x. That is why the 685x is equally important, okay, just like the 682x. Now once the 685x is recovered, S&P 500 is now holding, sustaining above the 685x, fine, because then after 685x, then there is not much problem, okay, no such big problem, because then it opens the 7000 psychological mark, because after sustaining at the 6800 685x, okay, S&P 500 will come into the condition to recover the 6900, okay, though there will be another resistance in the 687x, that will be the resistance, okay, but 687x is not that heavy, okay, as the 685x and 682x are. So once the 685x is recovered, it opens the 6900 and also the 7000, okay, then most likely it will recover the 687x, okay, and now for the 7000 to happen, again we might need to wait for a few weeks, because for the 7000 to happen, the 6900, okay, we S&P 500 must keep on holding, sustaining, closing on the daily basis, okay, back to back, at least 5 to 10 days it must hold, sustain in the 6900 range, okay, in between the this all-time high 6945 and the 7000, it will once again, it will, when it moves up, then again there will be a fall. This fall will be similar to this fall and this fall, okay, this fall will happen somewhere here, okay, then we will see, okay, this fall is there, will come down and then will move up. So in this manner, okay, after this, so this was the first one, no, this was the first one, then second, then the third and the fourth, fifth, maybe sixth, in the sixth or the seventh attempt, the S&P 500 will be able to move to the 7000 psychological mark. Okay, however, still there is no guarantee, no confirmation that before the AI bubble burst, okay, the S&P 500 will be able to hit and will move into the 7000. Okay, still there is no guarantee, okay, but as of now the conditions are not bearish or not heavily bearish. So still the market, still the S&P 500, Dow Jones, Nasdaq, these indices are holding, sustaining bullish in the long term and even in the short term also. So as of now the conditions are more supportive of the bullish nature of the bullish movement. We can expect more bullish movement in the market. That is why the 7000, everyone is talking about the 7000, but that will be like 6th or 7th attempt. Okay, so here I've shown you first, second, okay, third, fourth, then there will be the 5th attempt, fall, and then 6th or 7th, okay, then we will see the 7000. But for the 7000 to happen, okay, there is a non-negotiable condition. The non-negotiable condition is the 6900, because if there comes no closings above the 6900, if the 6900 is not recovered, then no matter what, okay, no matter what, the 7000 will never be tested, will never be achieved. Okay, so the S&P 500 must recover, must sustain above the 6900, must remain in the 6900, okay, hold, and not just for 1 day or 2 days, okay, for 1 week, for 2 weeks, it must trade in the within the 6900. Then only it will create the condition and will bring the sentiments required to hit the 7000. Then only the condition will be there. Otherwise, no, otherwise this will not happen. Then in the 7th attempt, the 6th or 7th attempt, it will have to come down, and it will have to come down heavily. Okay, then there will be these heavy bearish conditions. okay, in this in that manner, right? So what does this mean? This means that in the absence of the data in the coming week, in the absence of the means data or the earnings, okay, 6,800 in the bearish side, 6,900 psychological mark. These are the two psychological levels, two psychological marks in the bull side. When the 6,900 is recovered and the daily closings are seen above the 6,900, this is the bullish condition helping the S&P 500 to move towards the 7,000. If the 6,800 is lost, closings are seen below the 6,800, this triggers the fall to the 6,700 and also opens the possibility of the 6,600 range. Then there is a very heavy support zone in the 6,600. Then that zone will handle that fall, this heavy fall, okay. Otherwise we will see the continuation of this fall in the market. However, if there comes two more red candles, continuous two more red candles, then S&P 500 is expected to hit the bearish side saturation, and when it hits the bearish side saturation, then in that case we will see a reversal, technical reversal, okay. Technical reversal in the market means first it will be the retrace. First it would be the retrace, and if the S&P 500 converts the retrace into the reversal, then only it will come into the condition to recover, okay, and then to trade and to sustain bullish. So as of now we will expect S&P 500 to trade in between 6,800 and 6,900. The two key levels are 682x and the 685x. These are the two key levels for bulls and bears, okay. Above 7,000, below this much, okay, below the more fall, okay, more profit booking, and this thing will be there. And again, let me clear this thing that no one knows when the AI bubble will burst, okay, but through the numbers, through the levels, through the not through the technicals but through the numbers and the levels, okay, we'll know that if the bubble has actually burst, okay. And when there comes a confirmation of the bubble burst, then we will be expecting, okay, the definition of the recession, which says, okay, at least 50%, 50 to 60% fall in the market, okay. So that will happen, that is expected to happen in the 2026, in this year, okay, but not now. But guys, whatever will happen, I will keep you posted through my daily precise updates, okay. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And please subscribe to my YouTube channel if you have not yet subscribed. And guys, if you have any question that you want to ask, then please feel free to ask your question through the comment section.